Hello and welcome to the stock market analysis. Let's take a look at SMCI Supermicro Computer. Now, what is this stock doing? Well, just like many other stocks and the general market, it is bouncing up for a few days, 2 days. But yesterday, even though it went higher, it had a red bar. And one of the reasons why it's not doing so well is because it has dropped below this support area. This is where the apex of the triangle is. Let me just draw the triangle. Now, triangles are very important technical chart patterns because once it breaks out of a triangle, there's a possibility that it will move higher. But if it drops below the apex of the triangle, it's kind of telling you something. I am not able to go any higher. I am weak at this moment, and that is what is happening to SMCI. And whenever a stock drops below the apex of a triangle, you want to be a bit patient. You do not want to jump into that stock straight away because it is a clear signal from the stock to you that it is having problem going higher. So this stock has gone up by quite a lot, and there's anticipation that was going to list in the S&P 500, and that's why people are buying it. But after such a nice euphoria rise, eventually the excitement dies down, and that is what happens. And when it drops below this support area, of course, we see a very large red candle because a lot of people's expectation were dashed, and that is why it sell off. Now, one thing about support and resistance you have to always remember is a support once broken becomes a new resistance. So what's going to happen is even if the stock tries to go up here, it may have trouble going above this resistance area because support once broken becomes a new resistance. And if it's not able to go back above this area, there might be another sell-off, even down to the 200 MA. Now, the next area of support will be here because this is where the triangle low is, and also where it formed low, current low, this swing low. You can see this support kick in when the stock form a bottoming tail here. Now, this is not a very convincing bottoming tail because there was a very large green candle before it. Usually, I would advise traders not to trade off this kind of bottoming tail candle. You want a bottoming tail candle to trade off, you must have a gradual decline, not a very big candle before that. And yeah, of course, it's oversold, and the bounces are playable, but you need to take profits for a short trade if it reaches here. That is the area where the resistance kicks in. What I really want to see for a sustainable rise in SMCI is for it to break above this downtrend line and for it to go back again above the 20 MA and 50 MA. Now, when the stock is above the 20 MA and 50 MA and the MAs are rising, this was the best moment to buy this stock. So if it's above the 20 MA in its best, what does below the 20 MA means? It's not very good for it. So whatever it does bounces up and down, right? This kind of environment, you need to buy and sell very quickly, as opposed where around here it breaks out. You can just hold it for 1-2 months, only sell it after it drops below the 20 MA. So different situation requires the trader to trade differently. These are when it's gone so high, choppy situations, you need to go in and go out fast. Here, there's a breakout. You can ride it for 3, 4, 5 weeks. So the versatile trader needs to know what to do at each situation. And at this situation, what kind of trader should you be in? If you bought here, you should be going in and out very fast and not holding for weeks and weeks. So the only way for you to buy the stock and hold it for weeks is there is a real switch from this downtrend kind of movement, form a base, and then start a new uptrend in the daily chart. This is a base, right? Let me just switch to the weekly chart for you to see. This was a very long base in the weekly chart. let me just show you. Right. This was a stage 2 uptrend, long base, and then an uptrend. This is the kind of moment where you want to go in and out fast, or maybe just don't do anything at all. And this is where you buy in, ride it higher. Does this area now look anything like this area? Of course it's not. What does it look like? It looks like a stock that's really badly beaten up. It needs to form some kind of a base, maybe like this, before going back up. So my question to you is, what kind of a trader are you? If you are investing for the long term, you want to wait for it to stabilize. Well, a doji might be forming. If by the end of this week it can close a bit higher, doji forms, which tells us that, hey, this week bearish momentum is slowing down. We are not going to try to go any lower. And then next week you might want to see maybe another doji or a bottoming tail eventually trades around here, and a bullish reversal chart pattern or candlestick happen, then boom, all the way it will go up. So that is part and parcel of trading and investing. It doesn't mean that you need to analyze. You need to analyze every day, but that doesn't mean you need to take action every day or every single week. Now with that dealt, let's take a look at 60-minute chart. This is a resistance, this is a support. I know I should have colored this red so that you can see. That's why if you, this is a kind of bottoming tail doji pattern. If you bought here for a short trade, if it goes up to near here, you need to sell it. So I don't see any break of a downtrend line even in the 60-minute chart. But what I would like to see is for it to form a cup and handle kind of pattern, right? And break out higher. But if not, if this resistance just kicks in, is not able to go above here, you will just continue to sell off. So there you are. I hope that this analysis is helpful to you. So always remember, trade only when there's a high probability and you understand the situation. If not, just sit on your hands and be patient.